Hello guys and welcome to another video. In this video we are going to talk about JPED JPEGD. Sorry, I hope I'm pronouncing it correctly. We'll quickly jump to the white paper of the project, that's for sure. But before that, before analyzing the entire white paper, which is pretty long, so I probably will skip some of the parts. But I'll try to explain everything about the project. But before we jump there, let's quickly go through the basic information. Like, fully diluted market cap is $43 million. We don't know the actual market cap. We don't know the circulating supply. You can go through. You can try to do some searching in the Telegram group, and I am sure you will find the information required. And yeah, so these are some other basic information if you want to go through on the social media, about the social media, and this is their website. Bridging DeFi and NFTs. So basically, what they're trying to do here is that you can get loans against your NFTs, and that's the basic concept of the project. So now we'll try to analyze the project, the white paper, and mainly uh, how much decentralized this project is, because the level of decentralization of any cryptocurrency project is one of the biggest driving factor to attract big money, the big investors. And the more decentralized a project, the better it is for big investors to throw their money, to strike and attack the project with big money, so price can go up, and probably everyday investors can also get some profits out of that. So basically we'll analyze all this in the white paper while we study the white paper. So let's quickly get started with the project. Introduction to JPEGD. I hope I'm pronouncing it correctly. The only peer-to protocol NFT lending service is a service. JPEGD is a decentralized lending protocol that allows users to obtain loans using NFTs as collateral. So basically, if you have, let's say, a CryptoPunk NFT which is worth, let's say, $50,000, I know that it is not that price, but I'm just saying it for the sake of conversation. Let's assume that the price of that CryptoPunk is $1,000, and then you will, according to your LTV ratio, loan to value ratio, you will get $700 worth of loan in PUSD or P Ether. So you can actually trade this and convert it into your Ether USD, whatever crypto you want. That is what they are trying to provide the service. Uh, JPEGD is a decentralized lending protocol that allows users to obtain loans using NFTs. Loans can be in P Ether, synthetic JPEGD Ether, or PUSD, which is also synthetic version of the JPGD dollar, uh, and have a max loan value to LTV ratio of 70%, including boosts. So you will see what JPGD boost is. In essence, JPEGD empowers. I'm just going to say JPEG because putting D behind this JPEG word is very difficult for me, and it will waste a lot of time. JPEG empowers users to leverage their NFTs and unlock liquidity without ever selling. The protocol is governed by the JPEG token, which oversees, administers, and changes parameters. JPEG is completely permissionless, decentralized, and is not controlled by any central entity. uh, JPEG mission is to breach the gap between DeFi and NFTs by eventually allowing holders of any NFT collections to obtain a line of credit. So again, this is a very cool and unique idea, and from their website and from their while I was reading this white paper, because I had to understand the project and do some research before making the video, it seems that this is a pretty cool concept. And it this kind of concepts are of course going to be available in the future, but yes, right now this is a pretty cool concept. And it's likely that this kind of industry is going to become big and big every day. uh, why JPEGD benefits? Users use your NFTs to borrow P Ether or PUSD, and then you can convert it, of course, to your cryptocurrency of your choice. Instant liquidity, no need to wait for pairing. Perpetual fixed terms loans, loan all the time. The lowest NFT lending borrow rates, unique rare traits, valuation on selected connections, liquidation insurance, optimized user interface for large holders, and there are many more other features we will see in the coming sections of the white paper. Now, these are the supported collections: CryptoPunks, Fidenza, I don't know about that. Autoglyphs, I don't know. Chromie Squiggles, I don't know. Ringers, I don't know. Board AP Art Club, I am aware of that. Mutant AP Art Club, I am aware of this. These are, I think, top crypto NFT projects, so I am aware of that. My Lady Maker, I am aware of this project. I have also made a video on My Lady meme coin. uh, this is, I don't know, this penguin token. Maybe I don't know. Chronix, I don't know. Azuki, I know. And Ether Rocks, I know this, some of these projects. So these are pretty famous NFT projects, so I'm aware of half of them, not all of them. As we know, NFTs with unique traits make them rare in comparison to the rest of the collection. Because of this, some CryptoPunks and board apes used as collateral may be eligible for traits boost, which increases the borrower's credit limit and collateral value, which is a very good thing. So you can probably get more loan on certain type of CryptoPunks and board ape used as collateral. Keep in mind that all CryptoPunks are valued at floor except for aliens and apes, which have fixed values at 4,000 and 2,000 ether respectively. These values can be adjusted by governance in the future. Again, if the governance is going to happen in the future, then big investors will also come in the future and not now. So the big investors, you have to see things from the perspective of big investors. Big investors want governance right now, they want projects decentralized right now. So if the governance is going to happen in the future, then don't expect the big investors to put their big money right now. Big investors will also wait for a project to become more decentralized, and then only they are going to throw their own money, a big money like a couple of $1 million. So again, let me be clear that this video is not an investment advice, so please don't consider making any investment decisions just based on the information I provide in this video. Now, lending mechanics. How does borrowing on JPGD work? Like MakerDAO with DAI, JPGD uses a peer-to protocol borrowing mechanism. This means that the protocol is independent of any liquidity provisions. Any NFT from the supported collection which we just saw can be used as collateral in order to borrow this couple of assets, PUSD, P-Ether. Can I borrow both P-Ether and PUSD? Probably not. What are the differences between borrowing P-Ether and PUSD? P-Ether is probably when borrowing P-Ether, the protocol will charge 5% or 10% interest rate depending on the value of their positions, and in PUSD they will charge 2% interest rate. If I borrow P-Ether is my LTV ratio subject to Ether's price movement? No, because all NFTs used as collateral are priced in Ether. So, considering you do not adjust your loan amount, this means that your LTV ratio is only dependent on the NFT collection's floor price, which is monitored by Chainlink Oracle. So, yeah, they are using Chainlink Oracle for half of the NFT collection, and other half will be managed by that JPEG's Oracle. So, again, Chainlink Oracle is a very standard cryptocurrency oracle to track the price for major most cryptocurrencies, and of course for the NFTs. But as I studied this JPG project, they also mentioned that some of the uh, NFT collections will be tracked by their own oracles. So again, here the point what I'm trying to make is that if the oracle is designed by the JPEG for half of the collection which they provide loans against, then that has to be managed by the community, or the community of, at least I keep saying this in almost all of my videos, that community of at least 500 to 1000 people who should be who are dedicated for this project for a pretty long period of time. Those people should be aware about how their oracle works, and how JPG's oracle is genuine, and how it is going to provide genuine service to the users. Because of course we will all trust chain link oracle because it is pretty standard, but when it comes to JPG's oracle, the community needs to get involved. And with community's efforts, the JPG's oracle can gain more trust in the community and also in the user community, and that's how the project can gain more value. And if these kind of things are managed properly, then only big investors will come with big money, and that's what everybody wants. They want the price to go up, and for the price to go up, the big investors should uh, get what they want, and they want only decentralization. Now let's go to the liquidation insurance. JPGD has designed a novel insurance mechanism that is the first of its kind in DeFi, which is made possible because only the DAO can conduct liquidations, which is a pretty cool thing. But you will have to find out whether actually DAO can conduct the liquidations or not, because DAO means basically community of token holders. So if that is the case, then you can say the project is up to certain extent decentralized, and that can attract big investors, or at least it can get attention of big investors. Users can voluntarily purchase insurance on any of their positions for a 2.5% non-refundable fee that occurs in any time debt is drawn. So basically you get insurance for 2.5% non-refundable fees. In the event of liquidation, insured positions will have a 48-hour duration to reclaim their NFT collateral after repaying their outstanding debt and a 5% liquidation fee, which is a pretty big number. But when you are going to get liquidated, what else can you do? So at least you will have this much advantages when you buy this insurance. They also have the option to partially repay their outstanding debt plus the 5% liquidation fee in order to reduce their LTV ratio below the max LTV and keep the position open. The liquidation fee is based on the user's outstanding debt, which is principal plus any accrued interest. A user elects to purchase insure. This is an example of what they are trying to explain here, so let's go through it quickly. A user elects to purchase insurance and opens a CDP for 10,000 PUSD. The 2.5% insurance fee is assessed and he receives 9750 PUSD. Eventually, the debt on this position grows to be of 15,000 PUSD and the user is liquidated due to adverse market conditions. The user must repay the 15,000 PUSD outstanding debt plus a 750 PUSD liquidation fee, which they just mentioned here, the 5% liquidation fee. So that 5% liquidation fee will be 750 PUSD. Back to the DAO. The NFT is unlocked when the debt and the liquidation criteria are met. If the owner does not repay within 48 hours of liquidation, the insurance coverage lapses and the NFT is now owned by the DAO. So you get this advantage, you get this chance of getting back your NFT by uh, giving 5% extra liquidity fee, and of course the total debt amount, which will be whatever debt you attract in your portfolio. So they have some advantages of giving. I mean, you can have some advantages for taking the insurance, but again, I believe that all these things are very risky unless you are pretty sure. Warren Buffett has kept saying all his life that don't take loans unless you require it, otherwise it you'll turn out to be a gambler, of course. So I'm sure that in crypto markets rules are changing, everything is changing, so this kind of products will survive. But overall, I still feel that some taking too much loan is always risky. But from investors perspective, this kind of market has survived. Loaning market is everything in the world of finance, and it has survived, it will survive, and it will generate most of the revenue. So as an investor, your goal should be to, so the product, if it is good and genuine, then of course it is going to work. But the point is, as an investor, that will this project attract big money? then big money only looks for decentralization. They only care for how much decentralized the project is. So keep asking this question. This is the most important question, that how much involvement of the communities, how much uh, communities long term perspective is. So right now, even if the community is managing this project, let's assume that I'm not sure, I don't have, I haven't done the research. It's up to you to do the research. My job is to just simply help you to ask the correct questions. So if the community of this project is right now handling the project, then also there is a risk, because you'll have to make sure that in the longer term also the same community keeps handling the project, and they also keep growing and make the project more decentralized. Because the, as I said earlier, that the big investors are only looking for the level of decentralization the project has, and how much longer the sustainability of that decentralized nature, the community driven approach to the project is going to be there. That's how the big investors are going to analyze the projects. Otherwise, as you know, that 95% of the projects, they die, they come and they go in the span of couple of years. So that's why I keep saying that the decentralized nature and assessing that uh, decentralization level of JPEG or any other cryptocurrency project is going to be the key area of focus for big investors. And if big investors are going to do that, then why you don't need to do that? You also need to do the same thing, same process as an investor. Again, let me be clear that I am not giving any investment advice. These are just my thoughts, which I think that I should share with everybody. You can go in the description to read the disclaimer. Now let's see what the JPEGD boosts is. JPEGD makes extensive use of boost mechanism to unlock extra features. These boost mechanisms include up to 10% extra LTV per position via the LTV boost. So basically, you, let's say that your LTV loan to value is around 70% or 60%, then you will get extra 10%. So basically, if you can borrow 700, instead of that you will be able to borrow $800 against $1000 worth of NFT. 10% extra LTV and credit limit across all positions with the cigarette boosts. High credit limit for rare trades via trades boost, giving them a valuation above floor. The max boosted LTV is kept at 10% above the base LTV for each collection, meaning the LTV boosts and cigarette boost cannot be combined to go above this threshold. So either you can have a cigarette boost or you can have LTV boost, but you cannot have both the boosts together. Meanwhile, the traits boost for unique NFTs can still be utilized to unlock a higher credit limit collateral value. Boosts are created from the dashboard borrow step by selecting a position and boosting it. So uh, I think here you can see the boosts, and from this point you can click on the boosts and take advantage of this service. Now let's move ahead with the LTV boosts. LTV boost allows users to increase the LTV of individual positions by up to 10%. And this is the entire calculation. Basically, you will get 10% extra. So as a user you can have it, but again, all these things also has to be managed by the community's involvement in all these features is going to be the key. Right now this might be designed by the team members, but overall in the longer term, if the community doesn't get involved in all this, if community doesn't manage all this, if community doesn't think about growing and improving all these concepts which the team has conceived right now, then the project will not have any value. As I kept saying earlier also, that the big investors, they are only going to think about the decentralized nature of the project, because they are more concerned about not losing money rather than making money. If a person has $1 million, or let's assume you try to think from their mindset, that if you have $1 million, then what will be your first priority? Will your priority be to make it $2 million, or will your priority will be to uh, not lose the project? No, sorry, not lose the money. Sorry, there was some distraction. That's why I got fumbled. But that's what my point is. You'll have to understand all this. These are the key areas of focus for every cryptocurrency project. So just keep that in mind, because as I said earlier, the big investors should be the key area of concern for everybody. Trades boost multipliers and cigarette books, and there are also this auction section. By locking JPEG tokens, borrowers can increase their credit limit for rarer NFTs. The boost factor is dependent on the rarity of the NFT and the average value of the trades had traded above the floor during the collection's history. As such, the credit limit that the trade boost unlock can be calculated by the collection floor multiplied by boost factor. So this is going to be the boost. This is how you can calculate the boost factor for different NFTs and all. Apart from that, this is the cigarette boost. And as you know that the cigarette boost and this JPG boost cannot be combined together. So you can go through it if you want to. Now let's quickly go through this auction section. Bid on liquidated NFTs. JPGD auction are open ascending auctions. The buyers will start bidding until there is no more price bidding a higher price. So again, these auctions will be of the liquidated NFTs. So it is just for your reference. Probably you are not going to ever take part in this, but it's better to understand how the project works as an investor. So you can join the community, and whenever you join the community, you should know each and every part of the project, and also make sure, as I keep saying again and again, that you will have to focus on how the community is running the project, how much involvement the community is having in the project, because that's the only rule, that's the key rule for big investors. They are only going to see one and one thing, they are only going to follow one and one rule, and that rule is the level of decentralization a project has. So if you know the traditional investing principles, then in that Warren Buffett keeps saying only that you should follow only one rule, and that is value investing, and just invest for the long term. This is the major approach. And similarly, when it comes to crypto, the big investors will follow this one simple rule, and that is how much decentralized a project is, because all these projects, they face a lot of competition. The JPEG project which you are seeing, we are studying right now, this project is also going to face similar uh, they're going to face a lot of competition in the future, because these kind of ideas which are very big, and they are going to turn out to be very big in the future, these kind of ideas are going to face a lot of competition, and the only thing which can help them survive and keep their monopoly alive is that how they are going to build a community, how they're going to make sure that the project is driven by the community. In the future, all these ideas are going to be transferred to the community to manage, and those communities are going to be the key factor. The fight will be between the communities. The community bond is going to be the key factor. Because of that, if you think that only the money is going to connect the people and make the project drive and thrive, then it's not going to be the case. The community members will need to find a way to connect with each other beyond profit, and that's how the projects can survive. So you have to do all this research when you invest or think about investing in all these projects. And again, as I said, that I'm not giving you any investment advice. The idea of this project, the JPG project, is really cool, pretty impressive, and this kind of markets are going to be there in the future forever. And that's the reason why uh, I believe that one should also be cautious about the importance of decentralization, because the problem is sometimes we get blindsided by the idea. I even myself, I am pretty much impressed by the concepts of this project, but the thing is that we cannot be blindsided by such things. We have to focus on the core principle there, and the core principle is simply to focus on the community and the decentralized nature of the project. Auctions last for 24 hours, and at the conclusion, the winner can claim the NFT. If a new bid is introduced less than 5 minutes before the end of the countdown, the auction is extended by the 10 minutes, and this process repeats until there are no more bidders. You can withdraw your bid at any time if you have been outbid at the end of the auction. And if you are the winner, well, I don't think so that this is a spelling of winner, but I'm very funny and at the same time very lethargic from the team to have such spelling. You will be able to claim your NFT straight from the auction page. So basically this is the bidding process for the liquidated NFTs, and I'm sure that this liquidated NFTs money which they will earn after doing the auction, it will also be transferred to the token holders, and the token also, holders will also keep the track of this entire process, because if this entire process of auctioning is not transparent, then the project cannot be decentralized. If the entire process is not happening under the community's strict watch, then again the project will not be decentralized, and then there is a risk for everybody, and especially the big investors. They will always be scared of such things and they will move away from the project. So you will have to keep asking all these important questions. Otherwise, as I said earlier, that there is always risk involved when it comes to crypto, and even in basic investing, even in stock market, there is risk. So now imagine how much risk you will face when you try to invest in such small cap coins. Now, so there is another feature which is a notification bot, which is a pretty impressive feature. Constantly reloading our DApp to check the health of your position is quite unpractical, yeah, which is very true. If you uh, connect, you will have to connect, you will have to open your laptop and go to this website, and then enter the app and connect your wallet, and all this is a pretty hefty process just to see what is the status of your loan, or what is the status of your LTV ratio, whatever you want to check. And that's why what they have provided, or what they are providing you with, is the Telegram group. So low health alerts, liquidation alerts, and expiration of legacy, all these things you can track simply through your Telegram bot, which probably you can see from your phone, and you will be happy to go through it every time you have a concern about what the status of your project, I mean status of your loan. So it's a pretty cool feature. Access the JPGD bot by navigating to this. So this is the procedure, you can go through it, you can ask the team how to follow the process. I'm sure it should be very easy. So now, currently, the JPEG index is comprised of one NFT from each blue chip collection. So they have this JPEG index, which I think uh, where users of any size can gain exposure to blue chip NFTs. So this is the index where you can get the recommendation about what, according to the team, is good NFT collection. The IJPEG token was airdropped to participant of the index donation event. The token is also used to govern the index and can be staked in JPEG index. So this IGPAG token is used to maintain this index. How did the JPEG index start? Then there is a little story behind that. You can go through it as well. Now this is their borrowing guide, so I am sure that this is going to be very easy for you. If you do some research, you will be able to find it. I think whoever is involved in crypto, or whoever understands basic cryptocurrency, can do all this on their own. And apart from that, these are some of the other governance related thing, and the video is already long. Otherwise, I would love to talk about this governance things. Now let's, I have already made this 30-minute long videos, and then why not to talk about governance a little bit. So governance is the key area for any cryptocurrency project, and one cannot deny that truth, because as I keep saying earlier also, that the big investors, they are only concerned about the decentralization. They only want to see what the governance process is, how much control the users have. If the users do not have solid control over the project, then do not they will be scared. They will be scared because they are coming with big money, and they don't want to lose the money. A person with big money has only one rule, and that rule is that he doesn't want to lose the money, and that's why he is going to only focus on one thing, and that one thing is how much decentralized the project is, how much commitment the community has over the project, how much long term commitment does the community have, a lifelong commitment towards the project, how the community is going to keep their bond intact. The community's bond is going to be the key factor as well. You cannot deny all these things. So now let's see some of the governance things. Holders of JPEG can create or vote on governance proposal that shape and oversees the protocol. The proposal may include but are not limited to changing debt limits on vaults, changing deposits, interest, insurance, and any other type of fees, adding new NFT collections, approving increased credit limits for certain NFTs, etc. But of course, g- I believe that the community should also control this entire website. If this website is also not controlled by the community, then you can say that the project will never be truly decentralized. Some of the original team members will always be there in the project. It should be completely controlled, and that's a difficult task. That but this kind of difficult things create a lot of value, and big investors, they are only going to see uh, that how much decentralized the community is, how much control the community has over the project. Of course, they are giving all these powers to the community through voting, but still a lot of things will be handled by the team. It seems, at least from reading all this. So that's why I keep saying that the community's control over the project is going to be the key area of focus for big investors. Even if it is not for you, it doesn't matter. But the person with couple of $1 million, he is going to analyze all this. Imagine how much hard it had been for him to collect this couple of millions of dollars, and he's not just going to throw it away. You have to understand the things from his perspective. Okay. Now votes are conducted on our snapshot page, which you can find here. Votes are approved if they attain over 50% of the votes in support. Additionally, valid proposals must pass quorum. Quorum is 3% of the total supply. If a proposal achieves 50% vote in favor, yet does not meet quorum, it will not pass, as it is not a valid binding proposal. These are some of the links to the governance if you get inspired to join this project and take part in the governance process. This is the DAO treasury. So I'm sure that this is a multi connector wallet kind of a thing, and then these are the social media stuff. I mean the Discord, the community stuff. So I hope that you enjoyed this video. I tried to cover everything, and now there is nothing left here except this all these other links regarding airdrop and all that. So yeah, that's all I have for you in this video. I really hope that you enjoyed the analysis of the white paper of this JPEGD project, and please let me know in the comment section that if I have pronounced this name perfectly or not. And mainly, don't forget to like the video, do not forget to subscribe to the channel, and if you want to connect with me, then I will put the link in the description about my telegram group, where you can connect with me and ask me any questions if you want. And yeah, that's all I have for you in this video. I'll see you in the next video. Till then, take care. Bye bye.